Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:22 a.m. as I'm starting the video on Tuesday, July 12th. As always, please run your player at 1.5x. Quick look at futures. A little soggy this morning. Bitcoin down 4%, oil down 2.7%. And equities more or less off about 0.5% across the board. Yesterday we had a soggy day of trading ahead of the CPI print on Wednesday, tomorrow at 8:30. We may be in for more of the same today, just the market having jitters. We're in the middle of the summer, kind of soggy and not a lot going on. Let's go through the charts anyways. We'll try to speed this up a little bit. I know I always say that, and we always end up at the same place at the end of the tape. So let's see. Okay, so we came up and got rejected here at more or less 390. We dropped down, and now we're testing the convergence of technical support at 385 along with the moving averages at the 8 and 20 day moving average. It's a fairly important level, I would think. You know, you drop down here below and then you're back below all the moving averages again, and then that would open the door down to 375. So I really want to see that 385 hold, maybe get a positive result tomorrow, and then break out of the downtrend line. That would be significant if SPY were able to do that. Here on the expanded chart, you'll see that on most of the charts yesterday, there was a gap down, some more than others. But take account for that in your charts. Just make sure you locate them and be aware of them on any kind of a kickback rally that could go up and fill these upper gaps. But you can see here on the 60-minute chart, we had this two large volume over price bars here, and then that capped. It capped the advance here, capped it here, and now capped it back here, at least so far. So, we're open to drift down. We do have some larger volume over price support down here at 378, but at that point we're probably rolling over. I mean, support is support until broken, but I certainly don't want to see another $6 drop down to 378. I think there is some support right here at 381.50. You see that was resistance along this line here, and should be support at 380.50. Moving on to the Qs, still in a decent posture. Why? Because we're still above the daily downtrend line. Like SPY, we've come back to test the 8 and the 20, which is still above the breakout level. We could fall as far down as 285, and if it holds, that's fine. That would be a breakout and a back test of trend. But you get anything below 285, I would be getting a little bit concerned about that. Here you can see we broke out of this little triangle consolidation. We came up here, got rejected at the prior high. That's why it's always important, in your chart work and in your trading, when you're making an advance, it's always good to look left for structure, and a prior high will always be a point of interest for you to see if price truly can break above the prior high, and in this case it was not able to, and then we had the gap down open yesterday. So here, first thing in the morning, we're first support would be right around 288, and then I have another level down at 284 on the 1 hour chart. IWM still has a lot of work to do. You can see we didn't really even get close to the 50 up here. We dropped down yesterday, and now we're below all the moving averages again. The 200 is up here, 50, 20, and 8 day. So now we are below that. I've got first support coming in at 170. That number should be familiar. You should be familiar with. It's come up several times in recent days. Here we are. We were not able to even come up and test this prior high at 178.25. We rolled over down into this 172 area. We're down this morning. So if we were to come back and test this downtrend line at 170 and it held, you can see it's the top of this high volume over price bar, and it was support back here. It was a prior low back here at 170. I think that would be, if you're not in an entry around 170, 169, right in that area for a long would be a decent try. But anything below 169, I would be relatively concerned that the thing is just going to roll down to 167 and then come back to test this prior low back at 163. Moving on to Meta. Bad day at the office, off over 4.5%. Big gap down. We came down and lost this 165 area and then moved down to this 162 support where we've got a high volume over price bar. You can see it spent a lot of time in this area in recent weeks. So I think 162 is a nice pivot for this morning. To get kind of bullish, you'd want to recover this 165 area and make progress towards the gap. Short of that, if we drop below 162, I think pretty high likelihood that we would come back into this 158, 156 area to test these prior lows again. So pretty disappointing day for Meta, all things considered. Apple was down 1.5%. I think it's going to be important today for Apple to hold 145. Why? You've got a gap in the chart here that would open the door down to 142.50. You can see there was resistance here. You can see there was resistance here. So that becomes support now. So if we drift down to 142.5, I would think that would be an important level to hold. Probably a pretty objective place to try a long. But if you quickly get stopped out of that long, if 142.50 doesn't hold, I think this could go down to 140. Might not be today, but once that door is open below 142.50, it wouldn't take it much to get down to that 140 area. Tesla, excuse me, bad day at the office as well, down 6.5%. Very clear here that 700 is your pivot. We moved up into this gap, fell hard, and then spent really the majority of the day after the first couple hours down here consolidating at 700. If you go back in the charts, you'll see the 690, 700 was important back in the chart. I would not just given the price of the options and everything. Of course, it's totally up to you, but notice this big consolidation area between 665 or 663 and 690. That's going to represent a lot of support there. So instead of this thing drifting down to 698 and you going gonzo short, I would wait for 690 and have that be your go, no-go line for longs versus shorts. Maybe I should have put that pivot down there to begin with. Remember our saying or TA axiom, once you move outside of a trading range, you don't want to come back into it. So I would assume if we had lost 690, then that would open the door down to this 665 type area. So I think that's a much higher probability trade than just, as soon as it trickles below 700, getting short there. Of course, we'll have to see where it opens pre-market. I don't know if it's going to gap down or not. Microsoft, again, got rejected at 268. Had a pretty nasty first bar. Then was working its way higher back up towards 266.50 and then kind of rolled over at the end of the day. This program did not save my annotations. I think 264 is your pivot this morning. If you can hold 264, I think that leaves the door open for 266.50 and 268. You lose 264, then you're probably going to come down to 262, and then 259 would be an area of pretty good support, I would imagine, with all this traffic here. Amazon, gap down, bear flag, roll over. I think to get back on the right side of this chart, I think it's got to recapture 112.50, and then that would open the door to make a run back up towards this gap and potentially up to 117. And one thing you can always do when you've got a scenario like this, you can drop your Fibonacci retracements on from the low of the move down here at 102.50 to the high of the move at 117, and then see where your 38% and 50% fibs come into play, and that will, and along with technical support, that will give you a nice area of support to look for. So for instance, I can just tell by eyeballing this that a 50% pullback would be right into this 110 area where you've got your large volume over price bar. That should hold on, if it's weak this morning, get a fast move, pull back 50%, then bounce again. So I would be looking for something around 110 to hold if there's a weak opening this morning. Below 110, you can just see the levels as it, if it were to roll down. And if, 110 didn't hold, I would certainly get back on the other side of the trade and play for it to come down towards 107. And those are nice moves, by the way. If you got something, if you were, or if the stock's looking weak and it breaks 110, getting a $3 move intraday would be, a pretty nice trade. Google, same kind of idea. Fast move up, pull back. I think it's got to get over 23 325, recapture that level, I think that would be a good buy. We've got a split on July 15th. There may be some buyers motivated to step in there. Aside from that, though, I think it's got to hold 2280 right down here, or else probably roll down to this high volume over price bar that comes in around 2245, 2240, something like that. Netflix, terrible day, off 5%. We gapped down, lost this 182, came down to this 178 level. I think that's your pivot for today. Anything below 178, I think you're going to come back down to this 170 and a half area, back to test these prior lows. And then, of course, we got this momentum breakdown down to 164 if 170 doesn't hold. Semis were soggy yesterday. We had this little breakout that didn't hold. We gapped down and then pretty much just oscillated most of the day down to 202.50 support. I think that's your pivot for this morning. Understand that you've got a what amounts to a $2 gap below, and then you've got the prior low down at 192.50 right in there. So what you can do, and this is assuming you don't get a big gap down, but if you got that move below 202.50, you can get short for your gap fill, and if you get that, then you should be ready to do one of two things. One, you can take your profits on that $2 move and roll down to, say, the 200 to see if it doesn't keep going, or just take it off, take your profits, and then wait. What are you waiting for? Number one, you can either get long against the bottom of the box if you think it's going to hold, or two, you're going to want to watch price prove it. You say, okay, we're down below, we filled the gap. Now on a move back above 202.50, you recapture an important level. You can get long there, or you can wait for a breakdown of 200 and set yourself up for more or less an $8 move down to the test the prior lows. So all of that stuff is just a matter of personal preference. How you want to, if you're lucky enough or good enough to get this gap fill, are you going to be happy with that and take profits and wait for the next objective entry? Are you going to sit in it and hope for a breakdown? Or are you thinking more bullishly where you want to flip bullish at the bottom of the gap and hope for a rebound, or be more conservative and say, I will rebuy on the recapture of 202.50. So, and I think what you do there is go outside the chart if you're faced with that type of situation. And I'm speaking generically now, not just in this particular instance, but we know SMH is more or less a risk-on, risk-off type of an asset class. And if if you're holding a short down here towards 200 and you look around the board, you probably got all your your FATMAAN names, in a matrix somewhere, your Metas and Apples and Microsofts and Googles and Amazons and Teslas and all that stuff. If you see them stabilizing, finding their support and starting to bounce, SMH is probably not going to roll over and give you that $8 move. But if you look around the board and you see all the FATMAAN names, falling apart, breaking support here, there, and everywhere, then you'd have more confidence sitting in that short and hoping for more of a move down. So that's where you can look for other charts that would help confirm or reject a potential thesis that it's going to break lower. So keep that in mind if you're faced with that situation. ARC-F down 5%, big gap down, then consolidation. I think it's got to get above this 1645 to get back on the right side of the chart. Otherwise, it's open down here towards 1570. And one of the things that's been working pretty well for me is using the ARC names as a turbocharger, in the sense that on a percentage basis, it's either gonna, if the Qs are down 3%, ARC is pretty much going to be down 6%. If the Qs are up 2%, ARC is going to be up 5%. So it's going to outperform either to the upside or the downside. And so you can enhance your performance a little bit if you can focus in on these names and get the direction right, get the tea leaves right. Because if I think you're going to make more money shorting an ARC K, which was down almost 7%, versus an Apple that's down 1.5%. If you get my drift here on ARC K 60-minute. I know this bar happened fast, but we talked about 45.50 yesterday as a pivot, and when that broke, we said the door would be open down to 43.5, and that's exactly where it went. You had to act fast. Maybe you got it, maybe you didn't, but it does show the power of these levels, and that's really what I'm trying to bring to the table to you guys every day. If you can hone in on your execution skills, and if you had an alarm there, you had an opportunity to jump on that quickly. So today, 43.50 is your pivot. I drew a little trend line off of the lows, caught all of these lows, and so now if we break 43.50, you may see some support come in on this trend line, but if that does not hold, I think it comes down here to 41.50 pretty quickly. And then below that, you've got a gap in these prior lows. And so one of the things that you could do as a strategy is, if you're still relatively bullish and you think there's more of a bounce to go, and you were holding some longs, in your FATMAAN names, you could allocate a half a position short on the ARCs just as a hedge. And then if the market rolls over, then you get that turbo performance to the downside on ARC, while you'll be red on all your FATMAAN names, if it rolls over, but at least you'd already have a hedge in on ARC if this thing were to fail. And I think it's important on the ARC names to just simply realize that they're the Ponzi, bubble, fraud, all those kind of names. I hate to say it, but I mean that's what it is. And as we move through the summer, if we open up for a big leg lower, I think these unprofitable names that are all contained within ARC are not going to do well in that rising rate recessionary type environment. I think even though a lot of them are down quite a bit, I think there's more downside if the market as a whole begins to roll over. ARCW got rejected at the 50, so it's still in this box right at the midpoint. 52.50 I think is your pivot for today. If it drops much below that, probably going back down to the bottom of the box, down towards 46. XBI pulled back almost to tag the 8-day. I don't know what particular expiration you may have, but if you're in Friday, you're pretty much going to have to, if it's red today, get out of the trade and look to regroup if it pulls back to the 20 down at 77.5. Remember, we did meet the objective, right? We had the objective up here at 85, and we got there on pretty much on Friday, and a lot of us probably rolled up to 85 for this week or the week after. So on this pullback, just realize that technically, a breakout, then a pullback to 77.50, it's still a bullish chart. But if you've got a short dated long option up here at 85, you're going to run out of time is my point. So honor your stops, then look to reload if it pulls back to the 20 here and starts to move higher again. Same kind of idea with IBB. It was just, down less than 2%. It's really got to clear 127.50 to open the door for a move to the 200, and then potentially up to this 133 area, which would be really, really important. So let's wrap it up there. I think I wouldn't be surprised today if the market was again choppy, soggy, however you want to describe it, with a big CPI print tomorrow. I would certainly review all my positions and understand that you have no edge heading into tomorrow with that CPI print, because regardless of whether it's comes in better than expected, worse than expected, you don't really know which way the market is going to break. If I told you right now that the headline number is going to come in 8.2%, you still wouldn't know what to do, right? You wouldn't know whether to pile in long or be 100% short. That's how it works with these data points, that you got to wait for the reaction because there's no way to front run it. Even if you're right that it comes in at 8.2, you don't know how the market's going to react. So what I like to do on just trading names is be really light heading into that tomorrow, and then try to jump on either a down move or an up move depending on which way it breaks. And then if you have conviction names, then you can decide whether you want to, if you're long Apple or long a couple of FATMAAN names, maybe towards the end of the day, get yourself some short-term ARC names, puts, so that, tomorrow morning, if it breaks one way or another, one of them will be green. Either your longs will be green or your hedge will be green, but that way you won't be 100% or take the chance that you're 100% on the wrong side. I'll also say, and I wouldn't do this today just because of the CPI tomorrow, but we've got big banks reporting starting Thursday morning before the bell. JP Morgan, Citi, all those guys. If you have a directional view on banks, be thinking about what you might want to do with XLF, because you could, either buy, if you've got a bearish view of banks, then you can get some puts on XLF that expire, in a week and a half or 2 weeks. Or if you have a bullish view, then you can get calls, because that way you can take a directional view on the banks without committing to specific names. And that's what I like to do if I like or dislike a particular sector, a way to go through earnings without committing to one specific name. So think about XLF as we head towards big bank earnings starting on Thursday. So let's wrap it up there. Let's see how it goes today. Hopefully a little bit better than yesterday. I know in the trading room it was kind of morbid. Not a lot of stuff going on. Not a lot of stuff to capture intraday after the big gap down, and then it kind of oscillated the rest of the day. So hopefully today will shape up a little bit better than yesterday, but we'll just have to wait and see, keeping in mind we've got the CPI print tomorrow morning. So let's wrap it up there. Hope you guys have a good day of trading. If you're new to the channel, please hit the subscribe button, the alarm bell. A lot more coming your way. And jump over in the show notes. You'll find a link to the blog site where you can drop in your email address, and that way you'll not only get an invite to our trading room, but also get any content I may provide, morning, noon, or night, right in your email box. You won't have to go hunt for it. It'd be great to have you on the team. This has been Chris Buss with Traders Profit Compass. Talk to you next time.